Let's welcome on board then Bharat Madan, Group CFO at Escorts, joining in the show right now. Bharat, hi, morning. Good to have you on the show. Still comfortable and have good visibility when it comes to tractor sales?
Hi, good morning. Yeah, I think the sentiments on the ground are quite strong. So I think what we've seen in the last few months, so the industry continues to give very positive surprises, and we expect the momentum to continue as we move to the festive season months now.
Okay. I was just wondering whether the supply situation has eased now and what exactly is the inventory update at the factory level as well as at the dealer level?
See, in August, obviously, like I said, July, August typically are soft months. So that's why I think there's still some comfort. So I think from the second week of August, we started getting the supplies, which are sufficient now. So I think we are today working on the peak capacity level. But yes, as we move to the festive season and looking at the demand trend now, obviously supply will always remain a constant. So obviously looking at this now next 2-3 months position now. So I think it's going to be a hand-to-mouth situation as you move to the festive season where the demand is quite strong. So I think whatever we do, whatever supply constants we tackle, still I think the situation will remain tight in the stocking plan. So this month, yes, some stocking has happened so that the production was comfortable, which we started now impacting retail sales to some extent. But as we move into the next 2 months, which are going to be the peak season months now, so obviously production will run at the full capacity and we expect probably the sales momentum to continue in the demand side also.
Okay, so that's the outlook there as well. Earlier on, Mr. Nanda had called agriculture a silver lining to the dark cloud that we're seeing because of the virus at the AGM. So it's very rare actually to see this situation come together, so many tailwinds that actually manage to aid demand, on the rural front. Do you see this being a sustainable trend going forward, Mr. Madan?
Yeah, we think now, I think like 6 to 8 quarters look like should be positive for the sector. Because if you look at the cycle also, and we've seen 6-7 quarters of degrowth now in the industry, and in spite of the COVID situation, the sentiments have started improving from February, March last year. So there were good green shoots visible even at that time on pre-lockdown stage when we actually went into the lockdown. And now I think all the factors we look at in the rural side are positive, whether it's in the monsoon front or in the crop, in the harvest, the sowing has been better than last year. So we don't think there should be any impact. The water reservoir levels are pretty good. We think the next 2 crop seasons looks like to be equally good. So we expect, I think, as we move to FY22, with the whole, I think, next 6-8 quarters looks like very promising for the sector.
Okay, and specifically for Escorts as well, the kind of outlook, let's also factor in perhaps what's been happening in global markets, and the kind of traction that you're seeing there.
Yes, the demand has been quite good, but as we know, since the constraints have been on the supply, and obviously the first preference will always be to meet the domestic demand, because we also have good margins. So that has been our preference too. So even though in this month we've seen in August the exports volume had grown by almost 90%. So we have a good order book, but unfortunately because of the supply constraints, obviously there's a limitation which you can really fulfill those demands. But yes, some markets like Europe, etc., have started picking up and they're showing good trends. So we expect, I think, on a full year basis, still we will have a better export growth in this year too.
Right. My next question is that is the tractor industry in for a 2-3 year kind of a good demand trend uptick, or this is only for next 6 months and then we'll have to reassess it again?
So, because if I look at this cycle also for this industry, like my sense is the water reservoir levels are quite good and we got a very good monsoon this year. So that means at least for next 2-3 crop season, the seasons will actually look good. And we expect, I think this trend should continue at least, I'll say, till June of 2022. So which means at least next 6-8 quarters will be actually positive for the industry. And obviously after that, it will depend on how in 22-23 we got the monsoon, how it splits out. But otherwise, normally, we think this is the start of the next cycle, not growth cycle, and this should continue at least for 2-3 years.
Okay. I'm assuming that large part of your tractor capex is already behind. Now that demand has kicked in, can I imagine that there is going to be a huge scope for operating leverage and margin expansion in coming quarters?
So I won't say the capex program is over. So obviously there's some capex which is still in the pipeline. So last year also, I think it's some effort, some other capex, especially in the capacity fund, which is happening now in this year. So JV with Kubota will also start operating now. I think the production is likely to start maybe by end of this month. They'll start loading of the commercial production now. So yes, I think as you mentioned, so operating leverage definitely will have a good place because every 10% actually will add some percent to your bottom line, to your margin. So as we look at the volumes moving up and looking at some possible share of market movement, so we expect I think that should actually have a good play on the margin front.
Have all the supply issues with your suppliers been sorted out? Because all auto companies we've spoken to, all of them have a different kind of assessment or a supply issue because of the COVID crisis.
Yeah, so right now I think the issue may not be because of COVID, because obviously those issues have been sorted out. Again, there's no further I think lockdown happens in the suppliers end, especially in the winter Maharashtra or even in South India. But having said that, in spite of demands picking up suddenly to this level, obviously they are constant at the supplier and also on the capacity front. So it may not be because of cost, but it will be more because of the constant the capacities, which can actually impact the demand at this period. So that's what I think we're keeping our fingers crossed. So hopefully, let's see how the next 3 months go. Because they're a very crucial period for us. There's 45% of the silver industry happens in this festive time. So it's very important that suppliers are able to cope up with this demand scenario now.
Okay, a couple of other segments, railway business sales, for example, we've seen a huge boost there the last few years, especially even amid the slowdown in FY20. What's the outlook and the order pipeline looking like there?
So railway this year doesn't look like a concern. But first quarter was bad and it's total washout. But I think second quarter we've been able to make it up quite a bit because we had a good order book. So challenge I think in railway today is in the sort of fresh orders which are not really happening at the same pace, which was just really in the pre-COVID situation. So that's a bit of concern. So otherwise on the full year basis, this year we still expect growth probably may happen in the railway side because of a good order book. But if the order flow doesn't start picking up now, I think in the next 6 months, then obviously there will be some impact which we'll see in the first 6 months of next fiscal. So the long-term story for the business is still positive, but yes, short-term constraint can be there because of the situation in which the Indian Railways today and the financial condition they are in. So they are actually holding back 20 tenders. So the orders are actually started slowing down now in the rest of the order book for us.
Sure. What's a reasonable margin level that you could guide us for this year, given the rural demand story as well as the cost compressions that you've already undertaken?
So we expect at any level, maybe the margin should look at upwards of 100 to 150 basis points now. So, and also will depend on how much really operating leverage comes into play. So what sort of volumes really the industry is able to grow at. So I think all put together, definitely should be a good margin expansion. So at a company level last year, I think we saw around 11.5% operating margin. So industry should be able to be somewhere between 10.5 to 20% range.
All right, great. Thank you so much for joining us then this morning, Mr. Madan, and running us through the latest and the kind of outlook as well that you're factoring in currently.